only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today as we do every day on Ron Siegel Radio. I gotta love this one. It is one of my favorite days of the year, although anytime there's good food, I consider it one of my favorite days of the year. Chocolate Cake Day. National Chocolate Cake Day is today. Where are you going? Now, I'm just going to share. The bride's going to be away this evening. So I got a free time. Where do I go to get chocolate cake? The best chocolate cake in the Southland. Just share that information. Let me know that one. I will be monitoring social media to get that update from you. Dow Jones Industrial Average, 20,101 as we speak right now. Fairly flat on the markets, not a big change there. Oil down $1 a barrel. Now, here's the issue just for you in California. My friend Leo sent this over to me this morning. I had not seen this one yet. Governor Jerry Brown, just for us in California, going to raise our gas tax by 42%. Can you believe that one? Unbelievable. And he's going to raise vehicle registration by 141%. Unbelievable. Where is this guy coming from?
You're absolutely useless.
Yeah, Jerry Brown, absolutely useless.
What are you doing?
I guess he likes the idea of just taxing more and more everything he possibly do. Now, why are they doing it? Well, because they had a $1.9 billion shortfall in the pension plans, the public union pensions. So he's going to raise the rest of us 42% gas tax and 141% vehicle registration on top of the fees, which are already amongst the highest in the country. Jerry Brown, I think, I guess, this is bottom line here. It's really pretty simple. Elections have consequences, and the more we continue to elect these ultra-liberals with no check and balance in the state of confusion, we're going to continue to see more and more increases in taxes because they don't believe the idea or the concept of doing anything to help the state. So right now, where we are second in the country in gas prices, the likelihood is we're going to probably be taken over for Hawaii as the highest price when these new rules and regulations go in from Governor Moonbeam. Easy for me to say this morning. Unbelievable what this guy's doing to us. Did you catch this one at the same? Now, maybe we're going to have to get new licenses, driver's licenses as well in the state of confusion. Did you see this one? Now, I don't know if they did this scientifically, if this came from any scientist or anything else, but Democrat lawmakers on Thursday introduced a bill supporters say would make California the first state to add a third gender option on state identifying documents. A third gender. Now, scientifically, biologically, I think there's males and there's females. But in California, I guess there is a third gender. Figure that one out. Yeah. I don't know where they're coming up with their new rules and regulations, but California going off the deep end. I guess I do understand why the candidate for United States Congress in the San Bernardino area decided to leave California, move back to America to get some more reality into his life for his family. Speaking of reality, Anaheim's mayor, he's at it again. I wonder if he goes to the same university or the same school that Jerry Brown goes to. Just question there. Came up with a new proposal last night. Now, the city council had kept him in check. Now, you have to understand, Anaheim, the city council and the mayor have absolutely the same duties. They all have the exact same duties. So the mayor, though, says he needs to have somebody that's a little more in tune with his agenda. So he got through on a 5-2 vote a salary for his assistant. Unbelievable. You ready for this one? $160,000.
More money, more money, more money.
Yeah, total compensation package for the mayor's full-time senior policy advisor. $160,000. Why don't you get 3 of them or 4 of them for that kind of money? Unreal. It's amazing, but hey, that's the way the city council is now in California, in Anaheim, is just spend it all and tax the people more. That people wonder, why do I have a dislike for the policies of the mayor, and why do I refer to him as tax me more Tom? Well, because he likes to tax everything he possibly can in the city. That's just the way it is. New change of course over at Chili's. Do you go to Chili's, the restaurant Chili's? The restaurant chain has come under fire from pro-life advocates for a promotion that donates a portion of customers' pre-tax bills to Planned Parenthood facilities. Think about that concept of going to a restaurant. Now, I've never been a big fan of Chili's, but you can bet that I'm not going to be there again. I don't want my restaurant to be political. If I'm going to go and enjoy a meal, I don't go to movies anymore for the same reason. I have no intention of listening to that lunatic Madonna or Meryl Sheep or whatever her name. Meryl Sheep. I think I've got a soundtrack from Meryl Sheep in here. There she is. Is that Meryl Sheep right there? I don't know if that might be Meryl Sheep. I don't have no intent to go into a movie to listen to that loon either. Just the way it is. If I want to go to a movie, I want to have some peace and quiet and relaxation and entertainment. If I want to listen to politics, I can turn on CNN or Fox News or one of those other things. Don't want to cross the line. Just my personal opinion. I look forward to your thoughts on that. Ron at ronsiegelradio.com or Ron Siegel Radio on Facebook. You can give us that information, either one of those locations. Fourth quarter GDP numbers are in. Economy grew at a slower annualized pace, 1.9% according to the Commerce Department. Economists were expecting a 2.2% growth. Not good news there. The trade deficit came in higher than that was expected. Consumer spending, home building, business investment, all strong. And durable orders, December durable goods orders declined 0.4% from November, well below the consensus for an increase of 2.5%. That is a major league miss. Not good news.
I got a bad feeling about this.
Yeah, bad feeling about that one for sure. So all that is leading us to a very, very simple question that we're going to spend a lot of time on today. How will a Trump presidency affect the real estate market? Now, we're not going to be talking about it from a Democrat standpoint or a Republican standpoint. We're just going to talk about it from the standpoint of news. And while we do cover news, good news and bad news on Ron Siegel Radio, in this instance, we're not going to talk about good news or bad news. We're just going to talk about the news. That's what we want to find out here. How is this going to affect the real estate market? That's a big issue. Because in most households, real estate is our largest asset. The mortgage on that real estate, in most instances, is our largest liability. So we need to find out what those all have to do. So what does the new administration taking office mean to the industry? A lack of inventory at the time when buyer demand will rapidly be increasing, and the ability to properly share that information about mortgage rates. We're going to talk about all that and more. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. What is the Earned Income Tax Credit? The retirement risk that no one wants to talk about. Remember, you can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before? Or make a child's lifelong wish come true? What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars for nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by Processing for a Cause. When you do have that credit card and you take credit cards, most businesses do, why not spend less money on your credit card processing and get that taken care of. Get the less money, and 20% of that number is going to go to the nonprofit organization of your choice. I like that idea. What do you think about that concept? Sales are at the highest pace in 10 years. Real estate sales is what we're talking about. Despite a lack of inventory, sales reached their highest annual pace since 2006 as 5.45 million existing homes sold in 2016. Sales month over month down 2.8%, plus 0.7% year over year. Year inventory 3.6 months supply, down 10.8% month over month. Marks the lowest level since the National Association of Realtors began tracking the number in 1999. Prices, $232,200 is a plus 4% year over year. That's the national median home price. Interest rates still low at 4.19%. But what does it mean? If you want to buy a home, demand is strong and know your budget. If you want to sell, demand is strong and price it right from the start. And I'm going to say to you, hire a professional. That's the most important part. If you price your property incorrectly, you're going to end up hiring a professional down the road, and they're going to have a tougher time getting you a maximized value for your home. If you price it properly from the beginning, and when I say properly, I'm always meaning price it under market. The reason I want you to price it under market is I want to create a bidding frenzy for your property. That's going to do you a lot better in the long run if you have a bidding frenzy for your property. Just a thought there for you. When you have that bidding frenzy, people will start competing to get your home. That's what we want, is a competition and get you the maximized dollar volume for your home. So I shared earlier today that we're going to be chatting about how a Trump presidency will impact real estate. And I am not chatting about this from the concept of partisan politics. We're talking about it this morning from the sense of news. What is happening, and not good news, not bad news, just what is. I understand, not here in the state of confusion. It's overwhelmingly a Democrat state, so I understand that overwhelmingly we voted for Hillary Clinton. But from a national standpoint, the vast majority of the states, popular vote within the vast majority of states, voted for Donald Trump. What does that mean? Well, the University of Michigan's Consumer Confidence Index jumped its highest level since 2004, extending a surge in Americans' optimism for their finances and the U.S. economy. According to CNBC All-American Economic Survey, the percentage of Americans who believe the economy will get better in 2017 jumped an unprecedented 17 points. The New York Conference Board Consumer Confidence Index climbed in December to the highest level since August 2001, as Americans were more upbeat about the outlook than at any time in the last 15 years. NFIB Small Business Optimism Index had its sharpest surge since 1980. We haven't seen numbers like this in a long time. Small business is ready for a breakout that can only mean very good things for the U.S. economy. Total single-family home sales, according to the National Association of Realtors, we look at the projections from 2016 to the projections of 2017. National Association of Realtors, 2016 we sold 5.8 million. They're looking at a 6 million projection. The total Fannie Mae 5.9 is their number to 6.2. Freddie Mac 6.1 to 6.2. MBA 6.2 to 6.5. Looking at all of these different organizations are saying single-family home sales are projected to increase. Now, the one area that we have to be real careful of is the Consumer Financial Protection Bureau. Some people say they put a big stop sign on everything, CFPB. We're looking at there are some changes in the works, so potential changes in the works at the CFPB, and what they're looking at in regulation against this industry. So one of the things we want to look at, though, is home ownership rates. Now, people talk about increased interest rates, increasing the difficulty of getting a loan. Well, in the U.S., our home ownership rate right now is 62.9%. In Canada, they don't even have a 30-year fixed rate loan, yet their home ownership rate is 68.4%. 5.5 points higher than what we have here in the United States, yet they require a larger down payment. They require a shorter term to pay the mortgages, yet they have a higher home ownership rate. Looks good for America, being that we're looking at our interest rates increasing. Now, when we start looking at housing inventory, that becomes a big challenge for us. And why do I say that's a big challenge? Well, the median selling tenure of homes has gone up. People are holding on to their homes longer. What does that tell us? That tells us that there's pent-up buyer demand. When you start looking at a number that goes from 1985 to 2007, roughly, 22 years? We've been looking at anywhere from 5 to 7 years has been our tenure, our holding period for a home. Meaning we buy a home, we keep it 5 to 7 years. Most of the time it's been 6 years. And then we buy something new. We buy either a bigger home or a move-up home or a luxury home or a retirement home, moving, right-sizing, getting something a little smaller. We don't need that 4-bedroom house anymore. Well, over that 22-year period of it always being 6 years, life was going on. Now we saw in 2009 it went to 7 years. 2010 it went up to 8 years. We went to 2011, 12, and 13, 9 years. 2014, 10 years. Think about that concept. Now, as we build up the pent-up demand, did people stop having babies? Did people stop getting married? Did they stop getting older? Did the kids stop going to college or moving out of mom and dad's house? Well, no, they didn't. So we've seen that demand is really, really building up right there. And we have to wonder what's going to happen with that. That means people are going to start wanting to buy houses. According to Fannie Mae, from their Urban Institute study, for most adults near traditional retirement age, a home is their most valuable asset, dwarfing retirement accounts, other financial assets, and non-financial assets. Although relatively few retirees tap into their home equity, having it provides financial security. In fact, many retirement security experts argue the conventional three-legged stool of retirement resources, Social Security, pensions, and savings, is incomplete because it ignores the home, obviously our biggest asset. Now, what is happening with our homes? The actual year-over-year percentage price change has been 6.7% is the national number. 5.5% in California, 9.9% in Oregon, 10.5% in Washington. Nevada's at 6.1%. There's no place in America that the year-over-year change has been less than 0, and there's only a couple of states that have been less than 2%. We look at Wyoming, Oklahoma, Alaska, Delaware, New Jersey are the only places that we've really seen anything that's real small. Connecticut went down a little bit, but, well, I won't say why. But you look at these things. Utah up 8%, Colorado up 8.4%, Texas up 6.7%, South Dakota up 7.6%. One of the higher numbers in the country. Why would that be? Well, they've got great jobs there. They're not looking at minimum wage jobs. They're looking at great high-paying jobs, which is really what we're looking at. According to Anand Nalanthambi, the president and CEO of CoreLogic, and I'll quote him, price appreciation is the main ingredient for home equity wealth creation, and home prices rose 5.8% according to the CoreLogic Price Index. Pay down of principal is a second key component of equity building. Many homeowners have refinanced into shorter-term loans, and by doing so, they have significantly fewer mortgage payments and are able to build equity wealth faster. That's what we've been talking about, is you're getting a double benefit when you're owning a home. The benefit on one side is appreciation on that full value of the property, not your cash investment. And the other part is when you make a payment on that 30-year fixed rate loan or a 15-year fixed rate loan, part of that payment is going to principal. So you're paying down. It's like a forced savings account. The biggest issue, and I'm going to talk about this in a minute, is what is the effect we're having on equity within homes? Because I hear a lot of people saying, well, I don't know that I can move. There's pent-up demand. How can I sell my house? Do I have any equity? Well, we'll chat about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Continuing our conversation on the effect of the Trump presidency impact on real estate. We'll talk about that. What is the earned income tax credit and the retirement risk that no one wants to talk about? You can reach us anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Do you own real estate or have assets over $150,000? Do you know one of your heirs will be the probate courts and the IRS? If you don't have a living trust, you will go through probate. Call Heritage Financial Services toll free at 1-855-434-7400 for a free review. Check us out on Facebook, Heritage Financial Service in Lake Forest, California. That's 1-855-434-7400. Again, 1-855-434-7400.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by AskAboutReverseMortgage.com, when you are ready for that reverse mortgage. Age 62 with equity in your home. We were just talking about equity in your home. The reverse mortgage is a great tool for you to look into to understand what is the retirement risk that no one wants to talk about. For all Americans heading into retirement, your main focus is on building up enough savings to last a lifetime. But there's another major risk you probably aren't planning for: cognitive decline later in life. More than half of older Americans develop cognitive impairment or dementia by their late 80s, according to a new report by Boston College's Center for Retirement Research. If you're planning, you should include steps to safeguard your money against poor choices by a future you. Still, there's a bit of a silver lining in the data about cognitive aging. If you are financially savvy now, it's likely you will be able to manage your money well into retirement. That's because performing financial tasks depends on two types of intelligence. One type, called crystallized intelligence, requires knowledge. The other type involves making judgments using your memory, attention, and ability to process information, so-called fluid intelligence. If you want more information about this, make sure you give us get on our mailing list. Just go to ronsiegelradio.com. ronsiegelradio.com. Get on the mailing list because we have our next High Trust Senior Symposium. Our next High Trust Senior Symposium will be coming up. Just a thought for you. Interesting information coming up, and that is the Word on Wealth segment, again brought to you by askaboutreversemortgages.com. So we're going to continue our conversation this morning. We are talking about the impact a Trump presidency will have on real estate. And we started getting into the conversation about percentage of homes with positive equity. And right now, 93.7% of the homes in America have positive equity. 95.2% of the homes in California have positive equity. That's a good sign. There's so many people that still think that we're in 2008, 2009, 2010, and they don't have equity in their home. And if they don't have equity in their home, their concern is that they cannot do anything, that they're not going to be able to move. They can't buy that bigger home. They can't buy a home that's got 2 bedrooms instead of 4 bedrooms because they don't think they can sell their home and get out of the existing property. But when you look at it, and there is 95.2% of the homes in California that have positive equity, that just happens to be a big myth. Now, let's think about the next step then. What is the percentage of homes with significant equity, and how do we define significant equity? Well, that definition of significant equity is those homes with greater than 20% equity. Now, think about that concept because a lot of people in the recent past, in the last 3, 4, 5 years, have been buying homes with an FHA loan or a VA loan. The VA loan has a 0 down payment requirement. That means you have 0 equity when you move in. The FHA loan has a 3.5% down payment. Fannie Mae, Freddie Mac came out with some programs that have 3% down payment. And now we look and say 84.6% of California homes have significant equity, or more than 20% of the equity. 84.6% have greater than 20% equity in their property. That means you have the flexibility to do what you wish. If you want to buy a bigger house, you've got some equity there that you can sell and move on to a bigger house. If you want to downsize, right size, you have that option as well. 79.1% have equity. 79.1% of the homes in all of America have significant equity. And we're not even talking about those people that have 100% equity. They have no loan. The bad part here is only 37% of America believes that they have significant equity. Yet in reality, again, 79.1% legitimately do. And that's, again, it's not Ron Siegel radio data. This is data that's coming from Fannie Mae or Freddie Mac. Now, if you are an industry professional, because I know we get a lot of industry people, radio for real estate and mortgage people, listening to Ron Siegel radio. One of the biggest issues that's going to come up, according to Lawrence Yun, is interest rate lock. What is interest rate lock? It becomes people that say they don't want to move, they don't want to sell, they don't want to do anything with their real estate because they've got a great interest rate and they don't want to pay a higher interest rate. Generally, that's going to come into play when we start seeing interest rates over 5%. So even though people are going to have equity, they're going to start saying, well, I don't want to move because I've got a 3.5% loan. And if I move, I've got to pay 5%, 6%, or go back to the historical numbers of 6.5% to 7%. Why would I want to sell my house if I've got a 3.5% loan and I can go to those higher numbers? It's a good question, and that's called interest rate lock. And we could start seeing that when we start getting above 5%, again, according to Lawrence Yun. MarketWatch.com, higher mortgage rates have secondary effects as well. Consider homeowners who bought their homes in the past few years and who've enjoyed who've enjoyed a refinance as rates hovered closer to 3%. Unless a move is absolutely necessary, those owners are likely to balk at having to sell their home and then borrow at a higher rate for a new one. Interest rate lock matters, according to Mark Zandi, chief economist at Moody's Analytics. Zandi cautioned that he doesn't think rate lock kicks in until rates are well over 5%. However, and he calculates that a 1 percentage point increase in rates will increase the tenure of a typical American homeowner by just over 6 months. Also not helpful in a market starved for activity. So the next question becomes, where are interest rates heading? Well, January 7th, we're looking at January last year, we were looking at 3.97%. This year, January 5th, 4.09%. That's according to that Freddie Mac Mortgage Market Survey. I've shared those numbers with you in the past. We understand those concepts that interest rates are going up a little bit year over year, but they were down as low as 3.37 during the past year. We understand that as well. A lot of the great companies are not telling us what their plans are for interest rates. They've been holding off until they get a little bit more market clarity. HSH, great resource that we use all the time. Their quote, "We think that conforming 30-year fixed rates probably make it into the 4.625% to 4.75% range at some point during 2017 as a peak." Zillow's chief economist, I wouldn't be surprised if the 30-year fixed-rate mortgage hits 4.75%. Mark Fleming, his commentary, "I see mortgage rates getting closer to 5% at the end of the year." He's the chief economist at First American. Jonathan Smoke, chief economist at Realtor.com, our forecast is saying we expect mortgage rates to hit 4.5%. And Lawrence Yun, the National Association of Realtors chief economist, by this time next year, expect the 30-year fixed rate to likely be in the 4.5% to 5% range. Now, he's really precise there, right? He gives you a 10% spread. I don't know where he comes up with that big of a spread, but that's what he does. So there's some different thoughts about where we're going to be. We talk about this all the time, but what effect are the interest rates going to have on home prices during the same time period, during the year? Well, we're going to chat about that more when we come back. We're going to break a little early because I've got to get that whole portion into, well, we'll do it right now. So the concept is, where do the rates go from there? Is we need to understand that when interest rates take a large spike up, intuitively we would think that home prices are going to flatten out or decline. But that's not really the case historically. What we find out historically is when interest rates take a big jump up, prices jump with them. Why would that be? Well, the reason that happens is really quite simple. It's because the economy is doing well. The demand is increased. The increased demand is what's causing money to move into the stock market, out of the bond market. When money moves out of the bond market, rates go up. People are excited about what's going on. So in 1983, May of 83, interest rates were at 12.63%. By July 1984, they had moved up to 14.67, and we saw a 6.6% change in home prices during that same period. In 1987, March, interest rates 9.04%. They moved to 11.26% in October of 1987. That was an increase of 5.2%. Well, in May of 2000 or April 1999, interest rates were 6.92%. In May of 2000, they moved to 8.52%. That was an increase of 10.9% in home prices. So we see that interest rates historically, whenever interest rates take a big jump, a large jump over 1%, home prices do the same thing. We're going to talk more about that when we come back, the effect of interest on home pricing as we continue our conversation on a Trump presidency and its impact on real estate. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what is the Earned Income Tax Credit? We will chat about that. You can reach us anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We will be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today Being brought to you by our friends over at Gold Star Mortgage. If you're ready for a new house, the first thing you need to do is text NEST, N-E-S-T, to 79564. Get on a home search, and we'll also get you in touch with our friends over at Gold Star Mortgage to get you pre-underwritten. It is their Advantage program. Our friends at Gold Star Mortgage are standing by there. What is the Earned Income Tax Credit? The Earned Income Tax Credit. Well, claiming a tax credit is one way. It's a great way. Tax credits are absolutely the best way to lower your tax bill. Because when you have a tax deduction, then you only get a percentage of that. You're getting a discount from it's like a discount off of your tax bill. So if you're in the 30% tax bracket, you only save 30% on that. The tax credit is dollar for dollar, so you'd love to have tax credits. One example of a refundable tax credit is the Earned Income Tax Credit, and that's one that you can bring your tax liability below zero. Purpose of the Earned Income Tax Credit is to reduce your tax burden dollar for dollar. Typically, these tax breaks are designed to benefit a particular group of people. That's certainly the case with the Earned Income Tax Credit. It was introduced in 1975 to provide temporary tax relief to the working poor who had to pay Social Security taxes amid increases in the cost of energy and food. 3 years later, it became a permanent tax break under the Revenue Act of 1978. Over the years, the Earned Income Tax Credit has been expanded and altered in order to reduce poverty and encourage low-income individuals to find work. Despite its benefits to low-income individuals, especially those with children, the tax credit remains a controversial incentive. Some who dislike the Earned Income Tax Credit argue that it's costly. Due to tax filing errors and fraud, the government has mistakenly handed out billions of dollars to workers who didn't actually qualify for the credit. How the Earned Income Tax Credit works? Well, the Earned Income Tax Credit offers a subsidy to low and moderate income American families and their families. The amount that each worker qualifies for depends on various factors, including their earned income, adjusted gross income, filing status, and whether or not they have a qualifying child. Under the Earned Income Tax Credit program, workers with qualifying children tend to receive a bigger tax credits than those without kids. For the tax year 2016 and 2017, the maximum credit amounts for individuals without qualifying children, $506 to $510 respectively. For working families with at least 3 qualifying children, the maximum credits are $6,200 and $6,300 for the tax years 2016 and 2017. Bottom line here is make sure you are asking your tax preparer if you qualify for the Earned Income Tax Credit or what you might need to do for that. I'm not saying they're not going to catch it anyway, but you got to be prepared for these things on your own. That is the Mortgage Minute, again brought to you by our friends over at Gold Star Mortgage. Text NEST, N-E-S-T, to 79564. So we've been chatting this morning about the Trump presidency and its impact on real estate, not from a political standpoint, just from the news. And we're going to continue that conversation right now. I've been sharing a lot of information for you from various different resources. It's not all just the people at Ron Siegel Radio. We're going to give you a bunch of different resources here. So this one came from Market Watch, and their quote was, mortgage rates would have to be a lot higher before they really crimp a buyer's ability to afford a home. Trulia chief economist Ralph McLaughlin estimates that mortgage rates would have to be between 7 and 10% for many of the metropolitan areas. Freddie Mac's comment, despite the recent jump in mortgage rates since the election, the annual average for the 30-year fixed-rate mortgage was 3.65% in 2016, the lowest annual average ever recorded by Freddie Mac going back to 1971 when they started doing this. So what are the mortgage rates by decade? 1970s, 8.86%. In the 1980s, 12.7%. 1990s, 8.12%. And in the 2000s, 6.29%. Housing Affordability Index measures whether or not, a typical family earns enough income to qualify for a mortgage loan on a typical home at the national level based on the most recent price and income data. Basically, a 100 means a family earning the median income earns enough to qualify for a mortgage on a median-priced home at that time. Anything above 100 means the family has more than enough to qualify. The higher the score, the easier the number is. The Housing Affordability Index, going back to 2009, we're basically at the same price. It got really affordable in 2012 when the index hit 197. But in 2009, the affordability was at 169. Today we're at 166. Last year and the year before, it was at 164. So we're getting a little bit more affordable. But let's think about this. Right now, like I shared with you, that the ending number for 2016 was 166. We are better than, it's more affordable today than it was in 1990, 1991, 1992, 1993, 1994, 1995, 1996, all the way up to 2008. We are more affordable today than the 1990, all the way up to 2008. More affordable. Yet in the same time periods from 1998 through today, interest rates have been skyrocketing. And I'm going to tell you that renters paid a cumulative $478.5 billion in rent in 2016. $478.5 billion, a 3.8% increase from 2015. What is that telling us? There are a lot of people that are paying rent who could be out there or are the target market for purchasing real estate. Now, I'll share with you, if you're thinking about buying or selling a home, go right now and text HBG, Home Buyer's Guide, to 79564. HBG to 79564. And I've got a 20-page book that is the 2017 winter edition of our Home Buyer's Guide. You just text HBG to 79564. If you're on a computer, go to MBE Links, maryboyedwardlinks.com/HBG. If you're thinking about selling on the same concept, again, these are totally free for you. Go to the Home Buyer's Guide again, or the Home Seller's Guide. Text HSG to 79564, HSG to 79564. You can get our 20-page winter edition of the Home Seller's Guide. We put out a new edition of these guides every quarter. So make sure you're getting the current ones. Get them today. They're free. Again, if you go to the website, mbelinks.com/HSG, you can get the Home Seller's Guides. So I guess all told, what is the bottom line of all this information I've shared with you on the effects of a Trump presidency, or the impact of a Trump presidency on real estate? Seems to me like we're in a pretty good place. If you're thinking about buying a home, now is the time to buy a home before you get the influx of buyers, a lot more demand down the road. Same thing with selling a home, because the sellers come back in the springtime. We spoke about this a little bit earlier in the week when Melinda Johnson was on the broadcast with us. We talked about the idea, all these different effects of what's going on in the marketplace. Well, when we start looking at the different effects, I've just shared with you what happens when interest rates go up. Prices still seem to go up. What happens when the demand is higher? Well, prices go up when the demand is higher, and we've been talking about the idea that there's a lot of pent-up demand based on the tenure of real estate. So with all of these things in place, don't you think now is a good time for you to be getting out there, making a decision as to what you want to do? Or would you rather wait? That is always an option. You can wait a little bit longer. You can wait until prices go up. CoreLogic, I gave you the numbers of what CoreLogic is telling us about prices, right? I gave you the idea of what the Mortgage Bankers Association are talking about prices. You can wait until interest rates go up. Now, what effect does interest rates have when they go up? They also diminish your purchasing power. So be careful of that one. If you wait too long, the purchasing power drops because prices are up and interest rates are up. All told, the bottom line with all of this is really just saying to you, make a decision. Get out there now. a Trump presidency, the impact on real estate is going to be, we're going to see a very, very strong market. We see that jobs are coming back, the higher price jobs. I'm not interested in the minimum wage jobs because those don't do anybody any good anyway. You can't live off those minimum wages regardless of what they tell you. So why are you worried about those numbers? That's not the issue. It's the good manufacturing jobs that we want to come back. And that is the idea right there. And we ask you every day to set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990. And remember, make a lot of money, help a lot of people, have a lot of fun. Have a great day. Talk to you next time on Ron Siegel Radio.
About a minute, my boss just pushed me over the limit. I'd like to call him something. I think I'll just call it a day. Pour me something tall and strong, make it a